All right, hello everyone, and welcome to today's live session with myself, Greta Wall. I'm your host. I'm here with the entire team of the Inner Circle: David Prince, Kira Turner, Rick March. We're going to be talking about the game plan for the Fed. We are a day away from Fed Day, and that is, of course, one of the biggest things for the market to happen this year. As we all know, rate cuts are coming. Real quickly, before we get started here on our conversation, I do want to remind everyone that we are only going to be taking questions from those who are here with us in the webinar on StreamYard. So if you're watching on Twitter, you're watching on YouTube, you're watching on Facebook, and you want to ask a question, go to t3live.com/dp to join us here on StreamYard, and we will be answering those questions and talking about a bunch of other things as well. And at the end of this, we will be giving everyone a special chance to get in the room and see what these guys are doing live. So before we get started about the Fed, how was everyone's day today? We're a day ahead of the Fed. How's everyone feeling?
Gosh, I feel really great about today. I mean, we had a plan. We have been long for a while. The market's been running up, and it kind of started to feel like there was some hesitation today, and we trimmed a lot of longs, put on some short positions, and then ended up covering a lot of those short positions. And now we're just kind of light and ready for whatever happens tomorrow.
All right. How's everyone else feeling?
Like Kara and I chatted, and we both don't normally say this. In fact, I normally want more out of myself, so I'm always complaining about what I messed up. And I said, wow, today we really prepared well. It's one of those days where when everything started feeling great, I said it's time to put on some hedges. And a bunch of us did, and several different types of hedges. Several became almost offensive because they went up a lot. And at the end of the day, we have positions, but we also got paid on the short side, and we're prepared for tomorrow. So today was one of the better days in a while. It wasn't about the money I made, because I've had bigger days. It was the preparation.
Mm-hmm. Yeah,
everything seemed to fall into place. I had some muscle memory, as David likes to say, about a price in Oracle. And as soon as it got near 170, I laid into it. Yesterday was 172, today 170. And it was good for 3 points just in the first 20 minutes of trading.
So, great. All right, we'll talk a little more about some of the trades you guys have been doing today and over the past week in a little bit. But let's look at what's coming up tomorrow. So we're getting the FOMC rate decision is coming on Wednesday. This is from earlier in the day, but the chances of a 50 basis point cut are now rising. Market betting on about 65% chance, 35% chance of a 25 basis point cut. We saw this week lawmakers calling for a larger cut, 75 basis point cut. This was the letter that was penned by Elizabeth Warren and other Democrats saying that the Fed is behind and needs to cut even more. Focus for the Inner Circle is, of course, on the decision, but more about what's coming with the rate decision. We all know the rate cut's coming, but what's special about this Fed meeting is we're getting a dot plot. So that's really important for what's coming in the future. And then what does Powell have to say? So David, maybe expand upon what you're looking at when it comes to the Fed tomorrow.
Sure. So the way I always go into these events is, what are the expectations? What would be a disappointment to see the market lower? What would be better than expectations to see the market higher? Just to kind of have a clean slate to play off of. Going into tomorrow, there's no doubt that we've moved from 25 basis point expectations to 50. There also is the expectation to have another 75 basis points by the end of the year, right? So 100 basis points. And then moreover, another 125. So that's the template. That's the minimal expectations the market wants. Then on top of it, the market really wants that ideal scenario, right? Goldilocks. We are slowing down, but it's not a deep recession or recession at all. If it is a recession, it's minor, and subprime doesn't become a problem. And we are normalizing rates. We are not stopping the economy, right? So that's what the market wants. Thus, tomorrow, if we only get a quarter point, I know we probably will have a knee-jerk reaction to come in. However, if we have a quarter point and he points to several more rate cuts before the end of the year, several in 25, and then talks about how the economy is holding up just fine, even while the jobs market slows down, even while inflation has been conquered or certainly lessened, then you can get a really bullish buy on the dip. So for me, it's all about dot plot, meeting expectations or more, and how he conveys it. And what I to really simplify it, does he convey it like this is the way I'm normalizing rates? I think it's time. Or does he convey that he sees issues with the economy and they may be a bit behind the curve and they need to step up and loosen policy to make sure that the jobs market and the economy itself doesn't go into a deep, dark recession?
Mm-hmm. Everyone else, any thoughts on what you're focused on yourself for the Fed tomorrow?
I do. Powell has been very, very forthright about being gradual, not wanting to take steps very data dependent. I don't think he does 50 basis points tomorrow. I don't think he feels he's behind the curve. It will be gradual. I think the market comes in because they're looking for 50. You won't get it, and that will be a break to buy. I think, like David said, the dot plot of how many people have switched to a easing mindset, how many of the Fed governors are easing mindset, that will make a difference. But as far as 50, I don't think it happens.
And then I should touch upon, I'm split between, but I know what to do based upon them. So
Yeah.
my plan is if we have an uber dovish Fed and dot plot with forward thinking, we get a sell off, we know we can go out there and buy small cap and buy bio on the dip. But let's just look at all scenarios. If we have a more hawkish than anticipated, he's not going to be hawkish, let's just say not dovish enough Fed, then that dip is not going to be about buying small cap and bio. It's going to be about buying the inexpensive Mag 7 names that are trading at a valuation that's beneath their growth rate, i.e. a Meta when it's lower, or an Nvidia if it gets low enough. And those are the names that are going to work. So I basically have a group of stocks that I think work based upon everything beyond where we're positioned right now. But if we're not super dovish, you will see some people buy big cap tech and Mag 7 like they always do in that type of environment where everyone deems the Fed not dovish enough.
Mm-hmm. Kira, any thoughts on what you're looking at for the Fed tomorrow?
Well, I feel like we're more likely to pull back or sell off a bit than we are to go higher. So I know everybody's been kind of expecting 50 basis points. The market's been running up in anticipation of that. Anything less than that, I think, will be an easy sell-off. It may not last very long depending on what Powell says. So just like David and Rick, I'll be ready with my stocks, things that I want to buy in case we do sell off. One of my top picks would be Meta. I closed that trade today expecting some sort of a pullback. I'd love to get back into Meta. If we are after small caps and biotechs or smaller stocks, I would look at IWM, XBI for biotech. And so I'll just have to wait and see what Powell says and what kind of reaction we get, then look for some indication of the selling to slow down and maybe a bottom to be put in. And then I'll look to start buying some of these names, depending on what he says.
We're a little bit ahead of the game because we, I'm sure you'll talk about it, but did some SPX puts today, some IWM puts. So we're kind of in a good situation where we're still hedged. We've taken some profits. We have some hedges on. And frankly, I mean, just call it like it is. If he's just not dovish enough and we have time, I'm just going to press sell on the Qs and be short. So the plan is there based upon what he says. If he says X, we'll do Y. If he says Y, we'll do Z, etc.
So David, for you, if he does 25 basis points, what's your, A then B? If he does 50, what's your A then B?
I mean, for me, 25 basis points is going to be a sell-off. If there's enough time, I'll be short the Qs. However, like I always like to say, it's not that simple. It's much, especially this time, it's going to be about the dot plot, which we'll then read into, and then specifically 2:30. So you have the 2 o'clock, you have the statement, you have the dot plot, then you have 2:30, how he conveys it. So I'm not going to focus too much on that trade. That's what I call a Q trade. The real nitty gritty is when you get the cut combined with how he conveys it. Where does he stand on the economy? Where does he stand on credit card debt and things that people will bring up? And does he believe that we're going to have a soft landing and that this is normalization. And then I'll really react. If he gives me any hints that it's a much softer economy or talks about debt or talks about subprime, I'll just short the hell out of the Qs and remain long a lot of my positions because I do think we're still a buy the dip market. Unless, of course, he's just out of his mind and for some reason hawkish or scares the hell out of us about the economy. But my point is the Qs, which I'm not long or short right now, I'll use as a vehicle to get short if I need it. IWM, today I bought puts when we were ripping. I don't think I'd get aggressive to the downside, but I want to make it clear there's a Q trade between 2 and 230, but you don't want to get too caught up because I told people on Inner Circle this. We can get a quarter point. We can have a, sorry about my dog playing with the toy making noise. We can get a quarter point, come down, right? And then you can get an uber dovish presser where he talks about the economy being okay and really being focused on normalizing rates and making people feel he's got a really dovish forward guide and market will go right back up. So I won't make like some grand decision that the market's falling apart pre 230.
All right.
For me, I'd like to hear him say, we're going to be less data dependent. Those three words would make me buy hand over fist.
Yeah, for sure. Kira, you agree?
I do agree. Yeah. But mainly I'll just be sitting and waiting. I won't even make any trades until I've really determined what direction we're going. Because so many times on Fed days, the market rips one direction, then the other direction, and back and forth, and it can really chop traders up. So I'm going to sit back and wait.
We're good at not like forcing the trade. Sorry to interrupt here, but like one thing we've always said is if something comes up where we have an edge, we'll do it. Otherwise, it's been a great week already. Right. We're not going to trade because of the moment. I said this today and I kind of liked it. I was like, oh, I'm going to coin that. We're not going to trade because of the moment. We're going to trade because of the setup.
Exactly. Yeah. So we'll wait for the setup and then see what comes up. Yeah.
I know I told everyone that we were only going to take questions from StreamYard, but we are having a couple issues with StreamYard itself, but we are already getting some questions from some other sources. So everyone, I'll get to your questions in a little bit. This, I think, is an important one and kind of goes with what we're talking about, obviously, with the Fed. From Twitter, somebody asked, what do you see the ideal scenario for Tesla? More on the Mag 7 play or the small cap / rate dependent play? Anyone have any thoughts?
I would say these guys have been pretty active in Tesla recently, more than me. So I defer to you guys what you think. My gut is it's the perfect combination because of rates, cars. It really is one of the few Mag 7 names that reacts. It should react. Let me say this, and I'll let you guys take it. It should react to rates more than any other Mag 7 name. Yeah,
I'd agree. Kira, Rick?
Exactly.
I think so too. I'm sorry, Kira, go ahead.
I was just going to say, I think it is a stock that's kind of balanced because rates are so important to it, but it is also big cap. So it could do well pretty much in either scenario if stocks want to go up.
And we also have that meeting on October 10th, which clearly people, it's not a secret. And if it's going to work, it'll work into the event, not because of the event, right? Then it'll be a whole new trade. So there will be buyers on the dip.
To David's point, I think a lot of this rally has been in Tesla has been a run up into the event of October 10th. I think what's going to happen tomorrow is going to be less of a factor. If it breaks, it'll be a buying opportunity. The levels have been holding incredibly well. It's above the 8, 10, and 21 now, and even the 50. So I would expect if it can get above 235 and stay there, you'll fill the volume gap up at 245 in Tesla. I have no position right now, but that's how I would trade.
I see that 235 too. If it's above there on volume, it's got a lot of room, 10, 15 points pretty quickly.
All right. When it comes to the Fed decision tomorrow, some of the sectors that have the possibility to move are, of course, IWM and XBI, your small caps and your biotechs, those rate-sensitive stocks. But also, we would expect moves in the Qs and some moves in the SPY as well. David has talked about, we hear him often talk about, the cute trades he takes, and he might take some of those, those quick little shorts and stuff while the market is kind of figuring out its direction after the Fed. But of course, the focus will be on what Powell is saying at 2:30. David, I heard you in the room earlier today. You were saying, you did some research on what the small caps do in the past when it comes to rate cuts, and it was a little bit different than what you had
Counterintuitive,
expected.
right?
Kind of expand upon that here and tell us what you learned about what small caps do when it comes to rate cuts.
So at first, I had always thought, a lot of times you hear that small cap, unlike the rest of the market, won't move too far in advance. It needs those rate cuts for confirmation to start moving. But if you look at some recent history, right, during other, when I say recent, I mean past rate cut cycles, you'll have a little bit of underperformance when it actually happens, and then outperformance over the next 6, 8, 12 weeks. And certainly longer term over the next 6 months, there's outperformance. But a lot of times that it's a bit counterintuitive. What you would expect to work the best right off rate cuts takes a little break, right? And actually, let's just say is flattish or has a downward move. What I think matters more than anything, and if you look at all these rate cuts, so many of them come right before a recession, right? So it really, interesting enough, a lot of the data, I don't want to say this time's different, but so many things are different this time, right? The last time we had inversion, we came right into a recession, and we haven't had a recession. So I am hesitant to say it's different, but there's a lot of things that are different. We've never had a bull market that was so centered around 7 stocks that had a rate hike cycle during the whole bull market. And we've been hiking rates. So my point is, I'm prepared for things to be different, but in the past, when you get that cut, you'll actually see a little bit of underperformance from the obvious, sectors, biotech and small cap, for a very short period of time.
Yeah. So, all right, there we go. That's what happens. We'll see if that happens. This rate cutting cycle.
By the way, IWM just went
different.
up 19 points in a straight line. So it reminded me, well, we just did go up 19 points in a straight line. That would make some sense, right? Everyone wants to get paid right away.
This is, similar to an earnings setup. You look at where the stock is heading into the print. It's, where's the entire market heading into the print? IWM, if we're thinking about small caps, as you mentioned, has had that huge run up. So maybe there's not room for that much more
short term. Doesn't mean that
short term, right?
Right.
An interesting question we got from Twitter, X, whatever. Why is the Fed cutting with the S&P 500 at all-time highs with a follow-up that never happened before? I mean, market's not the economy, so the Fed kind of has to ignore the market, right?
I mean, I've never in my history of the world would combine the two. One, he's our Fed head because he's smarter than that, right? The market is not always indicative of what's going on in the economy. In fact, I was talking to a buddy today, and we were talking about the history of other recessions and rate cuts in 2007, what we knew and didn't know. And he was saying, well, we can't judge us, right? We're really not a great use case to judge where the economy is. We're obviously in much better shape. And there are lots of people out there that are suffering with highest credit card debt they've ever had at highest rates they've ever seen in over a decade. And frankly, all of a sudden, what people forget is you see no change in the economy, and then once it turns so viciously that if they wait too long, you're in a black hole and they can't just stop. So, and I want to make that clear. So if the jobs market is really slowing down, right, and if people are finding it hard to pay their bills, and if it turns out that earnings are going to be lower next year, which in a lot of cases there are, and they just wait for proof of that, they could be too far behind, and cutting rates isn't going to help. They're going to have to jumpstart. It's kind of like inflation. Once it's out of the bottle, it was vicious to get control of. Same thing on the downside. So I don't care what the market is. And by the way, the market may be here, but let's face it, I don't care if the market's broader today. There are umpteen stocks that are still 50 or 60% off highs. Thank God, as professional money managers, we're not focused on them. But there is a whole group of stocks that are nowhere near highs, which is why XBI's, 50% off highs, and IWM still 50% or 40% off highs, whatever the hell it is, not quite 40%. So the market at highs, first off, it's SPY, it's not Qs. Second off, that's not really indicative of the economy, right? I mean, at all.
Yeah, totally. Market is not the economy at all. And Rick or Kira, have any thoughts to share, expand upon?
The Fed's responsibility is not the stock market, and I'm pretty sure they don't consider if the market's down 1,000 points, they better ease, because I know they just haven't. They don't do that. Their concern is monetary policy, the economy, and employment. And from those, if those things are beneficial, then it'll be good for the country. It'll be good for the stock market. I'm not a Goldilocks type guy, but things are looking less bad than they have in quite some time to me.
Yeah, for sure.
And it's funny, I've never even thought about the Fed raising or not raising or lowering because of where the stock market is. It's just not even something that would occur to me. But of course, the stock market does follow the Fed. So lower rates are good for companies, which is good for the stock market. But it works the other way around from the question that was asked.
Yeah, totally. Fed doesn't respond to the market. Market responds to the Fed.
I mean, they're not supposed to do it, but housing market's unaffordable to a lot of people, and is a real problem. And you have the structural dynamics that are also an issue. So you could offset, why are they doing it? Well, maybe they're not that they are, but maybe they're trying to help other areas of the economy that could really falter. So
totally. Before we go into what you guys have been doing lately, some other questions we're getting. Netflix has been relatively strong for a long time. It's breaking from a long base since 2021. Does DP like it here?
I'm going to say that our biggest positive in the inner circle is no egos. So I'm the wrong guy to ask because I haven't bought it, and Rick has been all over it. So
all right,
although Rick, you asked me, Rick's the better man to answer.
Okay.
Yeah, we have absolutely no ego. So many times David, what do you think? So Netflix, you're right. The base is there, and it's been a strong one. This month, well, actually Monday, I was able to get some 705 calls. And Netflix, as the market pulled in, Netflix didn't sell off. The low for the week is like 680 something, 681 or 2. But then even with a vicious pull in today, we didn't go much under 700. To me, that's real strong, and it closed up at 707.25. I think it trades 725 this week, and I'll close out my options or possibly roll them over to next week. Depends on what happens tomorrow with the Fed.
It's a decent valuation. It's another one of those big cap stocks that's now a profitable company throwing off cash flow that actually trades at a decent valuation. So I get why it's working. And by the way, it's also one of the few stocks that never made a new high. Isn't it like still 40, 50 points away from all-time highs?
It is.
So it would seem logical. It would be the last one to finally do it,
Yeah. All right. And then from YouTube, Yari wants to know if NVIDIA looks like it will break 115.
Now that one I don't mind answering. Here's how I look
at it, David.
I look at NVIDIA as a stock to understand that you really want to look at the extremes, not the middle ground. And here's what I mean by that. There have been some very important extreme levels on the top end and the bottom end. Recently into 130, there was very clear resistance. I lightened up on 90% of my stock. And then on that move down, not this past Friday, the Friday before, we got pretty long again at 101. We then rallied into 120, and I lightened up most of my stock. Here, it's a nothing. There's nothing to be done. If you're thinking a year out, is it a fairly cheap stock based upon earnings and earnings growth? Sure. Has the AI trade become less exciting for the moment? Remember, I'm not talking fundamentals of the companies before anyone screams and says, I don't understand the dynamics. I get the dynamics. I get the earnings power. But for now, the market is less excited. I don't care about 115. And I advise people who are looking for real money not to care. I advise you to look at the extremes. And right now, it's probably buyable under 115. And it was probably shortable into 120. Here, it's a nothing. There's nothing to be done. Now, if it broke that 115 and got down to 107, 108, that's a level. 101, that's a level. Our last like huge buy, not because it was the lows, it's just the way it happened. 97 to 91 was my biggest buy of the year. 115 is like a blah to me. I will tell you at 120 last week as I sold stock and I sold some, I think one of the first trades I did this morning is I sold some of my stock, 118's pre-market. It's a nothing. Like it's obviously quieted down. The market may be a little bit more interested in small cap right now. It might simply be less interested in big cap. Nothing to do there. It's a great company a long time. If you want to buy it and put it away, that's a different story. Here, 115, who cares?
Well, I agree. 115, nothing. The moving averages have crept up though from the 105, 107. They're 112, 111 now. So what I would say is, if they come into 111 and hold, then I would be a buyer. But just for a trade, or it depends on your perspective. If you're talking about you want to hold it for a year or a year and a half, 2 years, then I don't think $4 one way or the other makes a difference. If you're looking for a shorter term trade like what we do to generate cash flow and income, then I would be more level specific and closest to 111, 110. I would be apt to buy.
I don't consider myself like an expert chartist, but there's two things going on here. You could look at this chart and say, ooh, 3 lower highs, right? And you could try and extrapolate or be bearish, but it's a great company with amazing earnings power that's driving the whole market, so I wouldn't do that. You could also short-term reckon. Am I right? You have this enormous cup and little handle, or is it?
Yeah.
So my point is there's no clear take here except I bought it at 101 recently. I'm still long some of that stock, although I've sold most. And here it's a blah. But it's an amazing company to own long term. And look for that extreme. The next time everyone tells you that AI is a joke and it's a scam and NVIDIA is going out of business, buy it. Right here, I just do not.
All right. Somebody wants where did it go? Let me see. Thoughts on Google, if it's at a good buy-in price right now. Anyone?
I bought some at 147s last week.
I remember.
I bought what I call a stock with a broken chart that had some issues, and I saw an identifiable oversold area that told me there were very high odds I'd win short term. I then didn't really have a great feel on it, and I have my bread and butter names that I like from a valuation perspective and fundamental perspective better. So frankly, I took a profit. Took 4 points and clearly sold early, 150, 152. Here, I have no edge with it. They obviously have some issues, right? Fighting the government sucks. So I like to, because I'm not like, I was going to say the wrong thing. Rick hates when I say I'm not the brightest guy in the room. All I'm going to say is I don't know what the hell Google's going to do or how they're going to win against the government, but I know there's easier fish to fry. So I like to go to NVIDIA when everyone hates it, or Meta that trades at 20 times and is growing more than 20% a year, at least right now, that seems to be expanding and doing great and monetizing new parts of their business when it goes lower. Google, I don't know, fighting the US government's a big pain in the ass, so I choose not to think about it too long term.
They're also fighting, they're also fighting the EU.
Yeah,
because they've got lawsuits all over.
That's a monopoly, all that's great, but fighting the government has proven to be a really difficult thing. Look at Microsoft all those years.
Yeah, totally. For everyone we have a great audience here, so just for everyone who's with us, stay tuned because we have a special opportunity coming up here at the end, but we want to talk about what's been happening in the inner circle recently.
Am I dancing today?
Yes,
David. I thought you wanted me to perform. Okay. No.
All right. So let's look at what's been happening in the room lately. And so just, show everyone what you guys do. This is a look at from a trade today. You can see there, David said around 11, he said long as a hedge for tomorrow, IWM 220 September 20th puts. So that's this week's puts on IWM. Took it as a hedge for tomorrow, but man, it worked out real quick today. They were flyers right when you took them. Talk about this trade, what you were seeing. David, Kira, you took it. Rick, you took it as well. So you can see just we work as a team. David has an idea, they'll all take it. Rick has an idea, they'll all take it. So that's an example of that, but talk about it.
I guess this one I'll speak on just because I guess I thought of it A lot of us have XBI. XBI was trading great. I started turning very bullish on XBI 95, 96 a few weeks ago. Since every time it dips, I buy some, it goes up, I sell some. There's a very clear resistance area at 103. Until we break through that area, it's going to just be back and forth. But we've been able to make some real money in between. And basically, you have to understand that IWM and XBI, in essence, are very close cousins. They're like first cousins that sometimes kiss, right? And the bottom line is it's going to be very hard for XBI to fly, meaning small cap bio, without IWM doing well. So here I was looking at IWM up almost 20 points in a straight line, knowing that we're levered in XBI. We also have VKTX, which did great for us the last few days before today, and Immunome, which has gone up about 20, 30% recently. Thought, so how do we protect ourselves and maybe even make a little money while the market's going down? So here's what we did. I looked and said, you know what? If IWM has a sell the news reaction tomorrow, it's taking XBI with us, down with it. So why don't we simply hedge XBI by shorting IWM? So when IWM was 221, what was it, 220, 221 today? I bought a bunch of the 220 puts. I think it was actually when it was like 221. Did it get to 222? Anyway, when it was near highs, like, yeah, so it got I'd say between 220.50 and 221.80, the high, we started buying puts, the 220s for Friday. I didn't want to make it like a lotto where it had to work tomorrow. Wanted to let it breathe, so we bought Friday's expiration, bought puts really cheap. Frankly, you know, they went up huge, and what was supposed to be a hedge, yeah, it worked out. Everything came in, but I was also able to take some profits, and I did. However, in case we get a sell-off tomorrow, it'll work in my favor if XBI pulls back, so I kept some.
Yeah, I was gonna say, did you keep some? You didn't sell
I
it,
did, because yeah, I really bought it for a reason. So it was fun to take a profit and cover myself with XBI. Also, mind you, we're not drinking the Kool-Aid. So XBI today, after adding back to it yesterday on weakness, 101. When we saw it above 102 today, I was selling some 102 calls. I was selling some of my stock, and I bought those. So I guess what's happened here, right? It's a trader's market. And if you pay attention to details, you can really do well. It's not a market just to buy high and hope things go higher. So we're cognizant of that. And I thought, what a great way to hedge ourselves. Then there's some other hedges I'll let Rick and Kira speak on, but it was the perfect hedge for some of our positions. So we did that.
Some of the other trades you guys did today, I don't have. I have the IBM puts. So let's just look at those. Those doubled
IBM
for you.
awesome.
Yeah, the quick little double there too on these, and then
I don't want to monopolize. So
Rick,
Rick or Kira, one of you guys talk about that one.
Yeah, Rick, you should, because I didn't do that trade today.
Oh, okay.
Rick, you followed David on this trade, I think, so you talk about it.
I this morning I ran a quick scan, and I said large cap tech with an RSI over 80. Two names came up, Oracle and IBM. And I shorted Oracle right at the opening, and then I bought IBM puts after it opened. And sure enough,
we bought the weeklies, right? Weekly.
Oh yeah, weeklies for this Friday.
The 215s.
Yep. And it was, I mean, they went in the money by $3 within 2 hours. So it was a huge play. I got out of them because that was the purpose of the trade. Notably, Oracle did not stay down or make new lows. So there's more buyers underneath there. But the IBM trade, it's very simple. It's like, where's your RSI? What's the stock been doing for the last 3 weeks? It's been going straight up. So guess what? You take and you get puts.
And one thing to mention, RSIs are different for every stock, right? Like an RSI on 82 on a small cap bio with a small float, I've seen it 90, 95 a million times. We recognize when the biggest companies in the world, like Oracle, get to 83. Like Friday, we shorted the hell out of it pre-market. Covered too soon. I think I made $2-3. It went down to 11. But so it's actually not something to show off about. But my point is, you know, we recognize that IBM is not the size of Oracle, but it's certainly a big cap stock that when it gets to 82 RSI, 9 out of 10 times is more a sell at least trim your long or short. So it was clearly a very logical setup.
Mm-hmm. And then Rick, I know you had SPX puts.
Yeah, that was the start of the day.
Today.
IBM was cool. SPX was really cool.
Mm-hmm. Yeah.
I trade those a lot. That's
yeah.
And when the market is trending, the SPX puts give you an incredible return. And as the tone of our discussion between David Kier and myself was that the market's due to come in a little bit. Those SPX puts just seemed like come and take me. And then we did.
Details. Not being modest.
Give me some details. What did you see in the SPX that said, oh, okay, I'll buy these puts here?
All right. SPX made a high. I'm really into the charts and levels and probably to a fault. But when SPX failed at 56.70, and it did, and it came in, and then it went below yesterday's high, which it stayed at 56.35, that to me said you have to buy them, the puts. And guess what? Not only did it go below that 56.35, why are you talking with your hands up, Rick? I have no idea. And then it went to 56.14 again with the hands. So
well, you're looking at the chart. And where did the puts go from where to where?
Oh boy,
I didn't do them, so I really don't know.
I like 2.5 to 9.
Oh God, that's pretty good.
Oh gosh,
you should go pro.
I'm thinking about it, but I have to learn not to talk with my hands when on camera.
So I did those SPX puts too, and I don't trade SPX puts that much, but this morning I saw us coming into all-time highs on the SPY and on the ES futures, and I don't actually watch the SPX trade itself, but I do watch the ES futures and the SPY, of course. And I got out of my meta trade that I have been in for about a week because it was starting to feel a little bit like it might be the top. And then watching some other names start to get weaker and sell off, and listening to David and Rick short IBM and Oracle. And I just thought things feel like they're going to come in. So I bought some of those SPX puts too, and that worked really well.
A lot of those leaders were overbought. Like Palantir was added to the US 1 listed BOFA this morning. I was like, what's wrong with these idiots? They haven't going up every day now. And sure enough, literally by 10 o'clock, it was red, right? Not going higher, but a lot of these big caps are trading 78, 79, 80 relative strength and are just a little ahead of themselves and need to breathe for a day or two. So I think we saw that on just a bunch of different names.
Do you think a lot of what happened today in the market was some profit taking ahead of tomorrow and the uncertainty with what comes with the Fed meeting?
I mean, I don't think we're special, more special than anyone else. And if we're doing it, like a million people are. Like I'm looking at XPI and going, okay, I bought some at 95, bought some at 98, I bought some yesterday at 101. Now it's 102.30, it's 102.40. I bought some options yesterday. BKTX yesterday as it's coming into 70 resistance. I see it at 68. Much, Feds this week. So I think that like any real money manager or trader trading a decent sized book, you're planning ahead. So yeah, I would think I don't read into today more than some people said, let me flatten things out so I can think clearly tomorrow and not be too stretched on either side.
Yeah. Well, David, you said it earlier in the session here. We're in a trader's market. And that's what we do. We trade. And as much as I love to hit a grand slam, and I know we were talking with one of them again with the hands, with one of the members today, and the guy loves to hit grand slams.
Can you do it?
No, I can't. I know my limitations, but thanks. But as you've said many times, and it's annoying, singles and doubles really pay off.
And then you catch
I'll say you guys did some more than singles and doubles today.
No, but you're right. And then IBM happens, and then SPX happens.
Right.
The point is, you don't set out to hit home runs, but if you do the job right, then the home runs happen. You just have to look for singles and doubles, and then if you manage them right. Like I remember Broadcom, we did them Friday, right? And I was just like, this feels right. Like, and I think Kira, I think all of us did.
Yeah,
I think this short's going to work out. Do I really want to be short Broadcom? No, I want to have like puts. So like Monday, all of a sudden, honestly, on a Monday early, I was like, that's kind of a home run out of the blue, right? So, you don't really have to shoot for home runs. You just have to position yourselves in the best ideas.
And speaking of home runs, we get this question a lot in various forms, but people, maybe they've bought a bunch of calls or puts and they'll say, hey, I'm up a lot. Should I trim some? And it's like, well, yeah, if you're up a lot, you should trim because you've got to keep taking some profit on these trades and not swinging for a home run every time where you could potentially give it all back.
That's
So
how you
that's
stay
a constant theme for us.
Yeah. All right. Let's look at what's
one of the
going
things
on.
I'm sorry. One of the things we like to do, put your hand down, Rick. We like to do in the inner circle is we like to become familiar with our members and know what they have in their accounts and how they're trading and what their mindset is. Kira had a perfect answer for someone in the chat today because she understood what they were doing. And for the size of their account, it was silly not to take a third or a half off. And that's what sets us apart from, I think, everybody else.
Right, exactly. Like the inner circle, you guys are obviously posting your trades. Rick, I talk with my hands too, don't worry. But you guys are posting your trades, people are following them, sure, but you guys are also giving guidance and you're helping people know, okay, I trade this size book. Where do I trim? Where do I trail? That's really special.
Will say to me, well, you're buying some micro strategy. I see into like today it was down a lot, bought some 129s. What should I buy? Like, I haven't talked to you in a week. Did you have those IBM puts? Did you have a great week? Did you buy a firm last week with us at 36? It's 44, 45 now. Like, give me an idea of where you stand, because how do you ascertain how much risk to take unless I know where you are today? Have you done well? Have you done poorly? Because the whole name of the game is to leverage success into your best ideas. And then when you're on a bad run, not to increase your risk, to fix it, right? It's about only doing the best ideas. And if you want to maybe have a little dalliance with the less than perfect ideas, you better be doing it with the house's money because you've been doing well. I always like to say, like, if you miss the best idea, the second best idea, and the third best idea, you sure as hell shouldn't do the fourth and fifth idea, right? Like, you have no right to. So I like to know where people are in their kind of week, month, to really figure out how much risk they should be taking or not taking.
Yeah, totally. For everyone who's with us, just kind of like our last call for questions. We're probably like the last 15 minutes here. So I just want to make sure if you have any questions, we get them in. Let me look back. I know we had some earlier that I didn't address. This one's interesting to me, so I'll get you guys' opinion. Telecoms have been up rallying with by the dip for a couple months. T-Mobile, AT&T, Verizon. Anything worth it to your understanding?
Are all those companies still in business?
Honestly, I don't trade any of those.
I pay 2 of them every month.
In the last year, I've traded T-Mobile from the long side. Verizon just made a very large purchase of a cable company with fiber, and that cost them about $3 billion. So it'll take a year and a half before that gets into their earnings and profitability. Eventually it will, no question. However, those are stocks. Sorry, somebody's at my door. Those are stocks that we don't trade because A, they don't move, and B, we're not interested in dividends given our mindset.
Okay. All right. And then this question: will the junkyard stocks go up after the Fed cut? Upstart, Zoom, Shop, etc.
Junkyards.
Well, I gotta let you know. First off, those aren't junkyard. There's much junkier than those. Upstart, we've very much been focused on. A lot of people just bought it yesterday at. They did a convertible, a little under 400 million. This stock will definitely go down on the convert into the 50 days. Probably viable. A bunch of people, not me, but bought it like 33, and we rallied today. It's $37 and hit 38. So the answer is it's already rallied. Secondly, it was just at 43 because I know a bunch of people were in after earnings, and it doubled. So your junkyard stocks have already moved. Shopify today, there was an upgrade. If you look at it recently, it was mid 60s. It's 74 right now. Those are what I call better quality small caps. There's much worse, far worse. So if you want to look for junkyard, I'll give you junkyard, but we don't play with them. If the Fed is dovish, if we get our 100 basis points for 24 and 25, those are the stocks that will work best. Since you find those junkyard stocks, you will probably find a firm, because it's certainly in the same category, to be a junkyard stock. You may not have noticed, but the stock's gone up almost 100% in a month. And it's been one of our biggest focus names, 36 to 38 big buys that went all the way to 45. And we were late. I mean, we didn't buy it early. It was in the 20s. So a lot of these stocks have already been working. Even though IWM may not tell you, because it has so many companies in it, there are a lot of mid and small cap stocks doing very, very well. PayPal even started to look good. PayPal, just had a run that it hasn't had in a very long time. So a lot of mid-tier junkyard type stocks are doing just fine right now.
All right. Let's look back again on.
I gotta say it. Like Zeta. It's a buddy of mine's company. So we focus on it because a dear friend of mine's company, and we've been involved since I think $7, right? I'm flat right now because the stock's gone straight up. It's what you would call a junkyard stock. Certainly no better than a Shopify or a firm. ZETA. It's at $27. It's up like 250% this year. So if you really look at the market, BKTX just went up 25% in a week. There are tons of mid, small cap stocks doing phenomenally well. If the Fed gets super dovish, they will continue to do it. Sorry, I just wanted to say there's a lot of mid, small cap names that are doing phenomenal.
Well, when we talk about this lead up into the Fed, everything has been doing pretty good. So do you think it takes a really dovish message from the Fed to continue that? If they come out like not dovish enough, how long of a sell-off could we get, do you think?
I think we could get a 3-4%, nothing too hairy, because I think as long as the dot plot backs up market expectations, I don't know, let's 3, 4, 5%, and it would be very viable. It just may be the vehicles that work after that dip might end up being different vehicles than we're accustomed to, right? But I think a dip is bought unless two things happen: unless he's not dovish enough with the dot plot, or he scares people about the health of the economy.
Right. That makes sense. All right. So what's been happening? We'll get back to some reviewing here before we end things. Rick, you caught that big spike in Oracle after hours after that ridiculous revenue guidance that happened last week. But then everyone remembered that 2029 is really far away. And the next day you guys got short the stock. So look at the chat. Look at the chat, great Oracle. Thanks for Oracle, epic call on Oracle. So, David, the next day you were like, okay, great. We had that huge pop, but let's calm down. 2029 still 6 years. What's the math there? 5 years away. Rick, talk about your trade that you did after hours and then how you've been trading Oracle. You were trading Oracle today. You already talked about it. And then David, what you saw in the stock the next day after that pretty ridiculous revenue guide we got.
When it was at 168, 169, not today, but previous day. Friday, probably. Friday, yeah.
Yeah.
David started 168, and I was like, okay, but it seems very strong. So at 170, I started. At 171, I added. At 172, I added. At 173, I was gagging, but I added more because, come on, it's Oracle. It doesn't move like this forever. And he went from 2029s. And when people woke up to, hey, what are we doing up here? And it started to come down. I remember David saying to me when the stock was at 165, he says, don't be greedy. And I still hold out for another $3 because I'm really good at being short and holding. That's one of the things I do very well, whether I'm stomping on a neck or selling scale up. And this I just saw as something to come back into the 161, 160 level, and it did. And that's the story of my Oracle. And I did the same one and made a few bucks. I mean, I was happy and made $3, but he made like $10 more than my $3. I think he made like 12 or 13 to my 2 or 3. I was out. I took my profits way too early. And I look back and I was like, one of the biggest companies in the world, 83 relative strength, 20 points above its 8-day, talking about 2029 earnings. why the hell in my right mind was I rushing to take a 3-point profit? So
Yeah.
2 points. So looking back, I was like, oh. Anyway, at least Rick did it the right way.
Well,
Mhm.
I'll be frank, or I could be earnest. Each level, I sold a little bit more in size, so I
Mhm.
didn't feel misproportioned. Because a lot
Yeah.
of times, if you go in with 5,000 shares at the beginning, and then the next level is 5,000 shares, now you're 10,000 shares in, and that's serious
Right,
movement.
you're reacting more than you should to each point. It's a very good point. I
Mhm.
always
Yeah.
tell people, like, it's funny, but it's totally true. Sometimes I'll make more money on 3,000 shares of a
Mhm.
position than like 10, 15 years ago when I was younger. I would size up. I'll do 15, 20,000 shares a spot. I'll make less money because I'm reacting to every point and I end up managing the trade, honestly, the wrong way. Like his point is maybe one of the most valuable things someone who's new can hear. Is size
Mhm.
will often make you not trade the stock, you'll trade your P&L is
When
what
you
it
guys are really good at holding trailers. Like, you take your profits, but you'll hold on a little piece and say, okay, I'm
We
playing with house money at this point.
guaranteed we make more money on our trailers percentage wise than we do on the rest of the position.
sometimes very true.
Yeah, totally. All right, Kira's big trade recently has been in Meta. This is a look at what she did on
So
some
good,
calls
so good.
last week. I think so. These you bought the calls on Thursday. They were the weekly 520s. It's just a little lotto for you, but you've had a much larger focus on Meta than just these calls, just as an example here. You got long the stock when you were doing this as well. And you said
Mhm.
earlier you sold that stock today, but then Meta is still a focus for you heading into the Fed meeting tomorrow. So, Kira, talk about what you've been doing with Meta and what you would like to do with Meta moving forward.
So I listened to David talk a lot about what his favorite stocks are, and Meta has come up for, I don't know, 6 weeks or something as his top big cap stock, the one he wants to own. And I just thought I've got to be in some Meta. Like I really want to make this a good trade. And I'm sure everybody else can see there's a breakout area coming up at about 540 something, 544, 545, where it's been consolidating for months. And when it breaks out, it should go quite a bit higher. So I definitely want to be in for that. But in the meantime, whenever it goes down significantly, I try to buy some. And if it goes down a bit more, I add to my position. Then, it pops back up. I'll trim some and use that adding and trimming as a way to find the bottom so that I can hold on to some when it goes back up. And so I was really I guess I was kind of lucky. I got in the other day at 500, put on a decent amount of size, and I finally closed the last of it today. As I was mentioning, it kind of felt like Meta had moved so far, and the last 2 days have been huge. And I just thought, $39 of profit, I will take it and be happy, and I'll look for another spot to get in. So if we do get a pullback tomorrow because of the Fed, I would love to buy it again, but probably not till about 520 is where I would start, around that 21-day moving average.
Mhm.
What Kira is leaving out, because she did this so brilliantly, I watched her do it. She took some heat on buying the Meta stock. 512, 510. She bought and it went down 505 the same day.
Actually, to correct you, I think 500, but it went down to even 495 or 493. It got down to the moving average.
Well, my
Yeah.
point is, yes,
She didn't
we
penny pinch and worry about being down a few dollars.
exactly. And she
Right.
had focus, she had a plan. And David says this, and I'm believing it, and so is Kira, and so are people in the chat. If you want to make big money, then you can't be afraid to take some heat on the way
Yeah.
down.
You know what else I did is I left room so I could add, basically I added 3 times what I had. So the amount of stock that I had as it went down, then I started adding around that 500. I might have done a little bit at 503 or something, and then more at 500, so that my average price came way down. And then when it started back up, and I was up, I don't remember where my first trim was, but probably $10 or $12, I took some profit, and then that starts to
Yeah.
it just starts to
Well,
make
when
it profitable
you
more quickly.
you all go into these trades with a thesis that you believe in. And
Right.
so you're not going into it and saying, okay, if this goes against me, however much, I'm out, I'm done. Some trades, yes, but if you have a real thesis you believe in, you take those opportunities
If you trade
to average down.
I got to say it because I really think it means everything in this business.
Yeah.
If you trade just with charts and no thesis beyond the charts, you're so average.
Mhm.
If you can actually think, well, I'm buying something with this earnings power trading at this PE with this event coming up, even though the chart's a little messy, that's how you buy these things and actually make 20, 30 points. Otherwise, you're just as good as the next guy or girl just trading the chart. So I do think, like what Kira said, I appreciate is ever since earnings, we're like, that was probably the best earnings report in Mag 7. It's still cheap and every dip should be bought. And that's what we did. I mean, I remember buying it at 480. I think Kira bought it even lower than that. So it's just been something we stuck with, even when the chart would get a little messy. We knew based upon last quarter, this is probably the name you need to own. And it helps that way when the chart doesn't look perfect, you can be down a few dollars. Because most likely earnings matter more than the chart eventually. Unless there's bad news. I mean, that's a different.
Right.
Even when you were near-term bearish last week, I think it was last week or maybe 10 days ago, I had shorted some Qs. It went $2 against me and I got out. And you reminded me very nicely that if your thesis is that it's going down, then don't let $2 or whatever, because it wasn't the money. It just went up. I was so wrong so fast that I was a
You
little bit
reacted to
confused.
the price.
Yeah.
Yeah.
And I try to teach that. I profess it, and I'm starting to hold on to it like that because it's so true. If you trade the market and not the money,
Yes.
you're going to be a winner.
All right. We are approaching an hour here, so I want to get wrapped up just so you guys can have, the rest of your evening. But each of you tell me how you're positioned headed into the Fed tomorrow. What do you have? What are you doing?
I'll go through quickly. For me, it's the usual Immunome and VKTX in my biotech sliver, and I have plenty of XBI and XBI calls. But I did lighten up today into that move to 102. I hedge via IWM puts. I remain with the trailer on NVIDIA down from like 101. I have some Affirm the same way, and did enter MicroStrategy today on that pullback because they did this convert 129s, trimmed some because it bounced all the way back to 132, and a few more cute positions, dinky little things. We bought Peloton the other day at 420. It's where to close today?
460 or something.
Yeah, I just bought it as a goof because the chart looked good. I'm like, I'm embarrassed I'm buying this, but it's worked for us. Anyway, the point is, and now I'm going into tomorrow with an open head. Like I'm open mind. I can really like focus on what he says. If we need to add exposure or maybe get some more hedges on or even get aggressive on the short side. So in all my favorites, which are levered towards biotech, always some NVIDIA, especially when I'm able to buy it cheap like a couple weeks ago. Affirm's been my favorite small to mid cap stock. I'm up 7-8 points, so I'm very happy about it. I'm not in a rush to get out. I think we're going to 50. VKTX after trimming yesterday, 68. I love the pullback today to buy because I'm a long-term bull there. That's how I'm positioned, but I sized way down and took a lot of profits into today's gap. Now I'll shut up and let these two do their thing.
Kira, you go next. How are you positioned?
I also have quite a bit of biotech. So I've got VKTX, Immunome, and CLDX, all three of which I've been holding for quite a while now. I've got some XBI calls and only a small amount of XBI stock because I was anticipating adding. So I will add either once we go through 103 or if it has a decent pullback, I'll put some XBI stock back on.
Do we both agree, by the way, over 103, we'll have no problem buying it if we really think it's not just a momentary lapse. So like the one good thing is we don't feel like we have to own too much because if it crosses 103 and we have a dovish Fed, I believe we're going much higher than 103.
Yeah.
I have a little. Oh, I'm sorry. Let me I'm almost done.
No, finish. Sorry.
I have a little bit of Affirm left. That's something I would add on a pullback as well. And then I've got a couple of hedges. So I've got a few SPX puts still, and then I've got some UVXY, which used to be horrible to trade, and lately it's been pretty good. So I keep on taking
You've been doing a lot of UVXY
little
lately.
profits out of that. So
And
that's
it's been great. Every time she puts it on, it's working. So
yeah.
I think you called her the queen of UVXY or something yesterday.
She did it the last couple of times. Like, I have no problem admitting I've been doing the most dumb thing. Mark will be running. I'll be like, it's about a good time to put on a hedge, buy some puts, or you do UVXY, and Kira would throw on UVXY. A couple of days later, it would be up 3 points, and I'd be like, I don't know, Nanny. What the hell's wrong with me? So then Friday, she bought it. She goes, David, you told me to tell you if I'm buying UVXY, and I bought it, and right away it worked. So, yeah, she's the queen of UVXY.
All right. And then, Rick, where are you positioned before the Fed tomorrow?
Well, same biotech as David and Kira. I mean, why? Not that I need an original thought here, but VKTX. I love the thesis. I'm also long Lilly, the stock. I've been long Lilly for a long time because fat people need to be in Lilly. And as far as the other stocks, I bought some Netflix calls. Nothing that's related financially. I don't have any bank stocks. I don't have any brokers. I'm just looking
We
at
did well with the banks last week.
Yeah, that was good. And the only thing is I've got some SPX put. No. Oh, yeah, I do have some SPX puts. I've got, sorry, you get a lot of stuff here. More Viking calls than I realized, November and December. And wow, more Viking calls. And these things happen in the best of families. And I'm waiting for the Qs to make a move tomorrow, or IWM, so I can jump on.
All right, great. All right, so for everyone who's with us, we're at over 2,200 people watching this right now, so we got a good crowd.
It's amazing when you bring a well-spoken, elegant woman like Kira, everyone joins. Because for me, that would never happen.
All right, so next week you guys are hosting a VIP event, which is a special chance. I can't talk today. For people to get a look inside the inner circle. The VIP events are limited amount of people that can join, but we have a special registration form for all the people who are with us to go to t3live.com/circle. This is a screenshot from the chat last week, but t3live.com/circle to register for next week's VIP. That'll be the 23rd through 27th. You guys are opening up the room for people to get a look inside. For the VIP event, these details will get sent to everyone that signs up, but you don't have chat capabilities. You're muted, but you can see all the ideas and see how the room works to see if it's fit for you and your account. So again, that's t3live.com/circle to join next week's VIP event. If anyone who's watching wants to get in to the room before the VIP event, you can email amber@t3live.com. She'll help you fill out your application and see if, hey, maybe you'll want to join. Maybe you can join tomorrow and be there for the Fed. But Inner Circle is, of course, focused on the Fed tomorrow, what Jerome Powell has to say, the dot plot, and all of that, and they'll be reacting in real time. So it should be an exciting session.
All 2,200 of you who watched, email Amber.
Everyone email Amber at t3live.com. It's a great Inner Circle, a great team of people. This is your team, David, Rick, and Kira, guiding you guys. So they're a great room to be in. I listen in a lot, so they have a lot of fun. They do a lot of really good trades, but they have a good time all day too. So I'll let all of you go. I'll let everyone else go as well, and we'll be watching the Fed tomorrow. So
good luck, all. Thanks for joining us.
Good luck, everyone.
Thanks, Greta. Appreciate it.
All right. Have a good night, guys.